What's up, YouTube? Welcome to my very first video of earnings season, a new series we're going to start on this channel. We're going to review the earnings of major companies I find interesting, and we're going to do so by using this Excel sheet where I listed all the companies I'm checking earnings for, and then we're going to note down the result. Let's not waste any more time. We're starting with ASML, Dutch chip maker company. So Q1 earnings, net sales 7.7 billion euros, gross margin of 54%. Expect 2025 total sales 30 billion, 35 billion, with a gross margin between 51 and 53%. That's looking good. The net bookings are down, and this is the reason why ASML stock went down initially, because the market didn't really respond well to this news. We will later see that this is because customers are waiting to place new orders because of all the uncertainty in the world, mainly because of the tariffs. The gross margin improved. First quarter total net sales came in 7.7 billion euros, in line with our guidance. The gross margin was 54, above guidance. However, the recent tariff announcements have increased uncertainty in the macro environment, and the situation will remain dynamic for a while. And artificial intelligence continues to be the primary growth driver in our industry. So, these tariff announcements, of course, increase uncertainty. That's why net bookings are down, because customers are unsure and they are waiting. Second one, Netflix. In Q1, revenue and operating income grew 13% and 27% year over year. Both were ahead of our guidance, so that's looking good. Revenue and profit growth outlook remains solid, with no change to our 2025 guidance forecast for revenue of 43.5 until $44.5 billion and operating margin of 29%. So high margins always a good sign. It means that the company is very strong and they can retain a lot of the money is coming inside. See the margins looking good. They have even been going up steadily, and the forecast for Q2 is even higher. Free cash flow is high, very good. They have been buying back shares, amount of shares going down. Netflix is looking good. Tesla's earnings, they're awful. Revenue down compared to last quarter, compared to the last 4 quarters. Operating margin 2.1%, lowest has been in a year and over a year. Free cash flow very low. The revenue, this is their financial summary. This is what they have to say about this terrible earnings. Decline in vehicle deliveries in part due to the Model Y update across all 4 vehicle factories. It's ironic that they don't mention anything about Elon Musk's crazy behavior, which probably caused vehicle sales to go down. Also because competitors are catching up with Tesla, BYD, NIO, you have so many more. Again, profitability decline in vehicle deliveries. They don't really mention why. The model production is down as well compared to the whole year, last year. So total production is down, total deliveries are down. This is a bad sign. The global vehicle inventory is up 22%. This is not what you want to see for a company that is selling physical products, that the inventory is going up. It's not looking good. This is the outlook for 2025, the whole year. The rate of growth this year will depend on a variety of factors. The broader macroeconomic environment. Of course, this is remarkable. This is also because of the tariffs. Tesla is one of the biggest electric vehicle manufacturers and sellers in China. Of course, the whole problem with China, US tariffs. I mean, if tariffs continue, Tesla will suffer a great deal because of this. So this is a little bit ironic because, of course, Musk supported the tariffs in the beginning. Cash, they have sufficient liquidity, so they're not going bankrupt any day soon. But yeah, deliveries may go down. Some quarters more, we will see what's going to happen. But this is not looking good. Plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. I highlighted S vehicles, say more than one, which is remarkable because Musk canceled the Model 2, the cheaper version of 20, 20 or 25k for average people, which in my opinion is a really bad move for this company. And a cybercab production starting in 2026. Now we saw Tesla stock moving up today and yesterday, which was because Musk promised to step down from the Dodge Department of Government Efficiency, at least for the biggest part. And he promised to spend more time at Tesla, which, as we can see right now, is really necessary because it's not looking good. Third one, TSMC, Taiwan. Of course, major risk because of the China possible invasion, which can always happen. Year over year, first quarter revenue increased 41.6%, while net income and EPS increased 60% and 60%. Gross margin 58, operating margin 48, net profit 43. Really good. Looking really good. Moving into second quarter 2025, we expect our business to be supported by strong demand for our industry-leading 3 nanometers and 5 nanometer technologies. While we have not seen any change in our customers' behavior so far, uncertainties and risk from the potential impact from tariff policies exist. So, of course, they remain mentioning the dangers of the tariffs, which can hurt them. For next quarter, um, gross margin is expected to be between 57 and 59%, and operating margin between 47 and 49%. They don't provide an outlook for the whole year. Okay, last but not least, Chipotle, the restaurant from the US, which sells Mexican food. Total revenue increased 6.4% to $2.9 billion. Operating margin 60.1%. An increase looking good. Earnings per share 0.28. 7.7 increase looking good. Um, this is looking not so good. The increase in total revenue was driven by new restaurant openings. Comparable restaurant sales decreased 0.4% due to lower transaction of 2.3%. So comparable restaurant sales is the same as same store sales. It means that the sales in the restaurant they already have are going down. Customers are spending less and less. You see lower transactions, 2.3%, so that's not looking good. This was offset by a 1.9% increase in average check, okay, but still not looking good that the sales are down. Net income $38.6 million. Earnings per share better than last quarter, or first quarter of 2024. They repurchased stock $553 million, average price of 54, and as of March 31, more than $800 million remained available under the share repurchase authorizations. So that's looking good, including an additional $400 million. So this can bump up the stock price in the short term, the next coming months. The outlook is looking good. Full year comparable restaurant sales growth in the low single digit range. So they expect comparable restaurant sales to go up again. It's looking good. And this is looking a little bit good, a little bit worse. Estimated underlying effective full year tax rate between 25 and 27%. Um, this is a little bit more than they mentioned earlier, of 22.9%. So tax going up, but the rest is looking pretty solid. All right, and this is the result of the video for now. I highlighted the companies with good earnings green, and I highlighted the companies with bad earnings red. So ASML, Netflix, TSM, and Chipotle are green, of course, because they had good earnings, and Tesla is only one with red because their earnings were very bad. Let me know down in the comments below what you think of this earnings season. If you have any recommendations or you want me to check any stock out for you, don't forget to like, comment, and subscribe, and I catch you in the next video.